So this particular strategy is going to be looking for a correction on a weekly template in which we can partake in and join the ride. So very simple. This here is a trade that's been taken once we've seen a market that is failing to break out of the prior week's highs. So this yellow line separates the weeks. So this is Monday and this is Friday. So on Friday, the market broke out of Thursday's highs. So it broke up and then closed high up. And then on Monday, it continued breaking out. So we've got day one of breakouts on Friday. We've got day two of breakouts on Monday. And we've got day three breakouts on Tuesday. Now what happened? On Tuesday, the price, although it broke higher, it actually came back inside of that trend. Which was bullish. And now, given the break of structure and that breakout, and there's the structure, given that break of structure, this is now technically a bearish scenario. So I'm being asked how to see the screen by Kelly. Does anyone else not see the screen that I've shared? What I'm going to do is going to reshare it. That seems to fix it. So just bear with me, guys. Here we go. Right. Okay, guys, I'm going to reshare it now. So here we go. Right. So I've reshared it. Is that working for you? Some were able to see it and some were not. But for those who weren't able, yeah, you should be able to see it now. Kelly, can you see it? Okay, fantastic. Right. So I'll just recap then. This is being recorded anyway, and I'm going to post it into the Discord channel for you under the education section, so you'll be able to see it anyway. But just a recap. So we've got a market here which is breaking out of last week's highs. That's last week between that yellow line and that yellow line. And that orange line that's going across was Friday's high. So that was the high of the week. So it broke out of that high on Monday and kept going. So this is where the move initiated. And it broke Thursday's high. So we count that as the first day of breakout traders. So breakout traders, what do I mean by that? There are plenty that would look at a break of a prior day's high and want to get part of the journey. So when the market breaks the high, you're going to have people actively moving in, buying that asset, the euro in this case, because of that breakout. And usually you'd expect them to put their stops in, obviously below where they've bought. And this is therefore money, liquidity for sellers that have sold to look for liquidity below structural points, such as over here, such as below over here. Maybe the stops are below the low of the day, especially if you're a higher time frame trader, maybe trading the daily chart, you might have your stop below that day's low. Okay, so the theory is, well, I mean, it's not theory, it's what happens. That's how the market functions. It's there to match orders. So the market will eventually come down into these orders. So what we're trying to do as traders, we're not trying to pick the top or bottom. but we're looking to take part of the journey and trying to take out what the market presents us along the way. So when you see this 3 days of breakouts, you're starting to think, well, at some point, I'm going to be looking for this correction back into these orders that have been left behind. The market will come back and essentially rebalance itself, okay, into a well, this market here is out of balance, so it comes back to rebalance. That's just the best way to look at it. So what we're looking to do is catch this ride. Now, the signal day for us, we don't take the trade on the Tuesday. I mean, you can, but that's not this strategy in particular. This strategy in particular is waiting for the market to close to the downside following a number of days to the upside. So we're looking for this consolidation, which is volume essentially being trapped up top, and then we're looking for the market to close below the open. Now, ideally, we want this segment here of that day to be closing relatively high up, higher than where it did. This is quite a significant move, and therefore the theory is that we're not going to get as much out as we'd like. We'd like to see it break out, close lower, but stay relatively high up, so we have more to gain from entering higher up. But in this case, it's fine. You're looking for asymmetrical risk to reward, and if you can take out, well, in this case, two to every one that you risk, if you can do that, that's fine. If you catch that a number of times, and the majority of them work out, then you're doing well. So in this respect, what happened? We got a close back below the prior week's highs that were made on Friday. So that's bearish. And we saw the market pumping up. Now, for me, I'm trading the US session, but this was a trade whether you're in Tokyo, London, or the US session. You're trading along with that breakout to the downside. So your thesis when you come into your session is you are looking to sell high, and you want to see a pump to a level and then the dump, and then you're trying to get in on this move. And ideally, as the market is breaking out, for a nice fast cash in, cash out, in and out job type of trade within your session. So if you were in Tokyo, then there was the pump, there was the dump, and you got another pump and another dump. If you were in London, there was the pump to a level. The level is the high of last week, if you recall. Friday. So that was the level. Closing price as well. Take your pick. So that's nice confluence of levels. So expected resistance. And if you were late into the trade, i.e. trading on a 15-minute chart, if that's the time frame you prefer and you want to see a 15-minute candle close, then you got the pump, you got the dump, and that's essentially a death candle, taking out all of those, like machine gun fire, taking out all the stops on the way down. And then this just accelerated further and further for the rest of the day with a beautiful 2-to-1 trade. If you're on a lower time frame, such as the 5-minute, if you recall, the previous week we talked about behavior of price. So you're looking for this sort of scenario on a lower time frame, so an engulfment. So let's see if we can go back to the 5-minute chart. And if anyone's got any questions, if I'm going too fast, I'm very prepared to roll back and help you out in any way I can. So if you've got any questions, just let me know. But it should be pretty straightforward stuff, this. But if it's your first time seeing this sort of stuff, then it'll just take a little bit of getting used to, getting your eye in. But so what you saw here was the price pumping up into a level. We got this wick, doji candle it's called. Then you've got the engulfment, and that's your entry. Okay, from a level, behavior of price in anticipation of the continuation of the correction that we're seeing taking place on this weekly template, and in anticipation of coming into longs, stops. You're looking for the stop losses. So in this case, you've got all of the money, essentially the breakout of that market over here on Friday. That's the origin of the move, and that's what we're targeting. Okay, so that's essentially it. Now, we're talking about day 3. So Monday is day 1, Tuesday is day 2 of the week, Wednesday is day 3 of the week. So more often than not, you get good volatility midweek because you've had a couple of days of order flow building up, and in this case, it's pumping up to drop. So you were sort of taking the stairs up, and then the elevator moves to the downside in the session. So in the US session, we're getting these sorts of moves. On a Wednesday, because of, as I've said, the build-up of order flow. So when you combine a day 3, so a Wednesday or a Friday, which is the other end of the week, so it's a day 3 closing day, because Wednesday turns back to day 1, Thursday day 2, Friday day 3. So I mean, you could essentially just come in and trade on Wednesdays and Fridays and look for this particular setup, because it happens often. And it's not to say that this always is going to work out. So you're going to get different types of bearish closes. And as I said before, you really want a bearish close where we've come up, taken out a level, which in this case we have. We've taken out Monday's high on Tuesday. So you've got breakouts in the market, and then it's consolidated, and it's dropped significantly. But ideally, you want to be able to trade up near that consolidation on the day 3. So if it come up like this, closed and gave a little pump up, and then, as I said, you're getting more bang for your buck. And you can be looking for 5R setups, asymmetrical risk to reward. So, but in this case, it worked out, and reason being because it's clinging to this last week's level, and it's stuck around the closing price, and we've got 1, 2, 3 pushes out from last week's highs. And as I said, that's not to say that all of these are going to work out all of the time. Often you'll see the market doing this. It'll give you a first red day, and then it'll go green again and continue up. But that's just part of trading. You've got to get an eye for this particular setup, this template. And ideally, like I said, you want to be selling up as high as you can. So you're looking for the pump up for the move lower. Okay, so does anyone have any questions with regards to this particular setup? If not, then if you want to give it a go tomorrow, well, we've got non-farm payrolls. So we do have risk on the calendar, but it is Friday, day 3. So once the data is done, well, that's what I would look for. I'd wait for the data to come out and then see how things are set up. But you might find one of these day 3 setups tomorrow. So you're looking for a couple of days at least of rise, breakouts, and then you're looking for Thursday as a bearish close, so that Friday, tomorrow, might give you the pump up for the dump. Okay, so that is essentially the first red day strategy, and it's the same for first green days. I'll just flip the chart over. Okay, so imagine that these were red candles. I'll take that indicator off because it's just confusing. There you go. So you've got 1, 2, 3 days of breakouts to the downside, and then you've got this day that broke out but moved up, breaking structure, and then giving you the ride higher. So a first green day, that's your signal day to look for the setup on day 3 for the continuation of that correction. Okay, so that is essentially it. So before I hang out, I'm just waiting to see if anyone's got any questions. And if not, then you can go ahead and start looking to see how the market closed today and see if you can get a first green day or a first red day signal for tomorrow's trading for your session. Dollar CAD, let's have a look. Yeah, we've got 1 day, 2 days, 3 days of breakouts. So we've come down into the low of the week so far. We've come back up into the closing price of Wednesday, and that's acting as resistance thereabouts currently. So it's not looking as though we're going to get our first green day, but that's not to say that we can't treat it as one for tomorrow, and you're looking for the day 3 correction into the trend from the week's low. Okay. Right, guys, doesn't seem to be any more questions, so I'm going to end it there. Thank you for joining. And all of these videos, as I said, are being recorded, and that brings us to a close of this series with regards to day 3 and looking at the behavior of price at levels and timing rotations. So a recap of that, your timing rotation, like for instance, if we go to the euro, I can't remember where that setup was. Just scroll back. Okay, so flip the chart over. So your timings are 15-minute rotations. So that was a 7 o'clock entry, 8 o'clock entry, or you could have waited. So that was the 8 o'clock entry. So that was the candle that you're taking it on. That's 1 hour. Hold on, bear with me. All right. Well, I've lost the setup. Anyway, so you're looking for the 15-minute rotation. So for instance, if you were trading this move here, that's an 8:30 entry for the continuation. Okay. Right, guys, thank you very much for joining, and I shall see you tomorrow.